Good day, I'm Beatrice Esreisen for Group Editors Live. Today's business news is brought to you by Access. Matthew Matthee, Wealth Manager at Graviton Wealth Management, is in studio to speak to us about why you should invest offshore.
Why you should invest offshore? Again, I come back to a lot of my experience. Being a wealth manager, I've had hundreds of conversations with people with a whole different views, especially if you're in South Africa. A lot of people are fearful. They want to take everything offshore. And they say, well, South Africa is going to hell. Look what's happening, corruption, the infrastructure is falling apart. And on that basis, they're fearful, they look at the rand, and they want to take everything offshore. And I always think, that's a bad reason to take money offshore. When you look at the data, these views have been around for a long time. Again, I refer back to what I said about the rand in an earlier talk. In 2001, the rand blew out to 12 rand. People thought South Africa was going to hell. They were going to take everything offshore. It was a terrible decision to make. At that point in time, from 2001, the rand strengthened again from 12 rand to 6 rand. The JSE went through one of the best performances it's ever had. Between 2000 and 2008, the JSE All-Share Index returned something like 17% per annum. What then followed between about 2010, 2015, again, the JSE returned 16, 17% per annum. From 2015 to 2020, that was a bit of a dead period. Maybe it's the last 5 years. The JSE only returned about 3%. And I remember sitting with clients at that point saying, we need to take money offshore. The S&P, the US stocks were doing incredibly well, really driven by US tech. It's a very narrow subset of companies that drove that growth. But if you look at it around the world, in Europe, in the UK, in China, in Australia, no market actually did well. It's just that 5 years. And if you held firm between 2020 and today, your return over those 3 years has been 18% per annum. And you may ask, why is this happening? When our economy is set to grow this year, I think it's 0.2% was the latest data that came out. We've got load shedding or corruption. How on earth does this happen? Well, look at the JSE specifically. How is it made up? 20% is Richmond. That's 20% offshore, luxury goods, Johan Rupert, selling to Europe and China. You have 30% in the miners. The miners got nothing to do with South Africa. They export everything. So just in Richmond and the miners, you got 50% of the JSE. Got nothing to do with South Africa. You add on top of that British American tobacco. That's another say 3%. You add on top of that Naspers and Process. That's already 10 cents. That's China. It's another 15%. So now suddenly we're sitting with about 66% of the JSE. It's got nothing to do with South Africa. The point is, quite often people get this wrong. They think that South African market is the South African economy, and they're not the same thing. But having said that, I still think you need to take money offshore. I'm not trying to defend investing in South Africa. Rather, there's another reason. And the reason is this chart over here. This chart shows the global GDP of the world. It sits at, I think, about $74 trillion. I mean, it's massive. GDP just stands for gross domestic product. It's a fancy economic term. All it really means, as an analogy, let's just say you had a household. This household produced one car valued at 500,000. It did some consulting work, another 500,000. You add those together, the total GDP for that company would be $1 million. GDP is just the sum of goods and service produced in 1 year. So your car's worth 500,000. Your consulting work, you got 500,000 in. You add those together, you get $1 million. So going back to this chart, $74 trillion, that's the GDP of the world, the sum of all the goods and services added up. The US takes up 25%. See, China is the second largest market. But obviously the difference is China has about 1.2 billion people. The US has 335 million. It's considerably smaller. They're a much richer economy. Now, if you look at this chart, take a while. I don't think you can even see South Africa on there. South Africa takes up 0.4% of global GDP. 0.4%. It's 1.6% of the US stock market. That's the reason you shouldn't have. That's the reason you should invest offshore. Not because you're negative about South Africa. And I've explained what South Africa's marketplace is made up with. It's very different to the economy. The market is not South Africa. But having said that, the reason you invest offshore is because if you have all your eggs in South Africa, you're only sitting in 0.4% of the global economy. You want to invest in the whole world. There's a huge amount of companies out there, and you don't get access to that kind of technology stocks, for example, stocks coming out of the US, coming out of Europe, coming out of the UK. It's just become a lot more diversified. So that's what I want to leave you with this chart, and why you should have money offshore. And of course, rather speak to a professional, let them decide, because you always have to have money in. The data is very clear if you're building a portfolio to have local exposure, but talk to a professional to determine what exactly that is. There's been a lot of research on that, and let that be your determinant. I hope that makes sense.
Thank you, Matthew. This business segment is proudly brought to you by Access. Internet your way.